How's it going, guys? Johnny here and welcome back to another video. And today I want to talk about Hims and Hers. Can this company get to $100 a share? So the current share price is around $8 a share, so that's a nice return. It's about a 10x return, but this is not according to me. We'll have a look and see if I can believe that, hitting that sort of valuation. But according to the CEO Andrew Dudum, he's saying the company could be worth up to 20 billion market cap. So the current valuation is around 1.6 billion. So we do get that run up to 20 billion, it'd be around $100 a share. So for the people that don't know what the product is and what Hims and Hers do, so it's a healthcare company all done online. It's for people that want to be more discreet. So for people who have anxiety and depression, they don't really want to go out and see or go to their local pharmaceutical or their local health shops, or even go and see their doctor. They want to keep it more discreet, especially when it comes to the type of products of like hair loss, erectile dysfunction, skincare, and anxiety and depression. So this is a perfect fit for those type of people. And for the erectile dysfunction, I had a look on this and to see what kind of reoccurrence subscription you get and what variety of different pills you can get. I do like the variety of different selection. It's not for me, it's for a friend, of course. So this is something that maybe I'll be using in the future. Not just for that, okay, that's skincare, you know, just try and stay younger. Okay, yeah, so let's stop talking about what I've used it for. Anyway, that's the Him side of things. Let's go and look at the Her side of things. Let's have a look at their popular section. So they've got acne cream, wrinkle cream, birth control, mixed minoxidil, hair growth retreatment. So cool. So the next thing you need to think about is like, are people coming back? Are people going to use the subscription, keep getting these products sent to them every like 3 months, 6 months, 12 months? Because that's kind of the setup for their subscription base. When I had a look, it's every 3 months, 6 months, and 12 months, and how many you want to be sent to you. So best thing to look at is the subscription year-on-year growth and what kind of growth rate we've got for that. As you can see here, for Q2 2021, the year-on-year growth is 76%. That's some really nice numbers, and that tells me that people like the product and are coming back for more of it. So let's have a look at what Andrew Dudum said about the 20 billion market cap valuation. So the 20 billion is a great target. I think we can grow above 20 billion. So he thinks it can go more in the long term, of course. This is exploding and has been for a number of years. When you talk to healthcare investors and institutions, there's a lot of confidence that people would strongly prefer to have unlimited access, availability, transparent pricing, and convenience when it comes to the healthcare system. The existing healthcare system and the public market both know that. And so we have an amazing opportunity from a company standpoint to build what the future healthcare system will look like for the majority of the country. To do this with the consumer entirely in mind, 20 billion is not an unachievable number, and surpassing that is very doable. So just quickly, just so you guys didn't know, they were founded in 2017. So we are coming into this at the start of this exponential growth, I would say, going into the future, next 5 to 10 years. As you can see, already from 2017 to 2021, they are already in market valuation of 1.6 billion. Just think where they can be in 5 to 10 years, guys. Obviously, if they keep up with their current growth rate on their subscription based. And let's have a look at some of the other metrics in the company as well. So we've got net orders here, we've got quarter-on-quarter growth there, we've got revenue quarter-on-quarter growth here, we've got 69% year-on-year growth, gross margins are up 78%. So guidance for the 2021, we've got around 251 to 255 million in revenue, giving it a 69 to 71% year-on-year growth. Some really good growth numbers for a growth stock, as you would like it to be. Adjusted EBITDA, we've got a minus 35 to 40 million, and that's something we need to think about. Right, they're not obviously profitable at the moment, but can they be profitable next year? So let's go and see if we can find something about that. Also, guys, just one thing to note as well, they do have some celebrities marketing their products as well. They've got Miley Cyrus, Jennifer Lopez, and a guy, I'll check this article earlier. I'm not too big into American football, so there's a guy called Rob Gronkowski. I think I said that right. He's I think he's a big American professional football player. I'm not too sure, but yeah. So the marketing side of things, a round of applause to these guys to get someone like J-Lo and Miley Cyrus and get this product out there for the I'll say this is more of a target towards the millennials that are coming through, the younger generation. I feel like this is something they would use. Just quickly on the price to sales for the next 12 trailing months, we've got a 4.7x price to sales, and last 12 months we've got a 6.9 price to sales. So really good price to sales on the growth stock, especially on the kind of growth they're doing with this around 70% mark on most of their metrics. Just quickly, this is a list of some of my favorite stocks. So the HIMS cash flow right now is 170 million with zero debt, which is good, and they have been acquiring companies as well, and something we need to have a look at. So just looking through some of the news, we've got HIMS Hertz expand UK footprint, acquire the London-based Honest Health company, so an acquisition here. I won't read through all this because there's so many different things in here. They also, I think last week, they got put onto a website called Revolve. So here's Revolve. Just the company by itself is worth 4.8 billion. So they're quite, a medium-sized company. Good financials actually. This might be a good investment. Anyway, Hims and Hers are now on their website, I believe. Yeah, so Revolve is adding diverse range of health and wellness solutions from Hims and Hers to its site, revolve.com. It's cool. Hopefully they can bring in more revenue. Hims and Hers expands customizable compound skincare offerings with Hims and Overnight Anti-Aging Duo. So you've got new products coming out as well. I think they're more specialized. I think they're going to be, because you can't just put loads of products out, right? So they're going to make it more specialized, make it more refined, because sometimes less is more. So if they do get in that route of just going into a variety of different products, you're not going to get, you need that data, right? So you need to know if that product's going to get that customer to come back with that recurring subscription, because recurring subscription based companies are one of my favorites. And for him to get that year-on-year growth that they're kind of doing right now, I think it comes down to the actual quality of the product. And as you can see, to have less is going to be better, because they can specialize in what they do and be the best at what they can be, and compared to its competitors as well. And just quickly, as you can see here, it looks like they're climbing the stairs annually. Last year they did around 148 million in revenue, and as you can see this year they're looking to around, like I said earlier, it's 250 million in terms of their guidance for the rest of the year. So yeah guys, they're climbing the stairs in terms of, so one thing that highlights for me is that they're climbing the stairs in terms of revenue, right? But they've been falling down the stairs in terms of share price, and when I see that, that's when my eyes light up. That's when I start to think, oh, hang on a minute. All the metrics inside the company is going up, but the share price is going the opposite way. It's going to get to a point where we get that change, they get that shift from the downtrend to that new uptrend. Okay, so just quickly looking at the chart. Why does this look so messy? Okay, so just using the Fibonacci retracement from the technical levels here, you can see we've bounced off support level around $8 a share, and then this is where I'll be accumulating shares, right, going forward, using the technicals of the Fibonacci to pick up more shares. So yeah guys, just a quick overview of Hims and Hers. There's probably a lot more I can go into with more detail, but for now I just want to let you guys know what kind of stocks I've been looking at over the last week, and this has definitely been my #1 priority to get more shares in this company. Let me know in the comment section below guys, have you got shares? Do you like this company? Do you think they can beat out their competition? Do you think this company could be acquired by maybe Amazon or something like that? If you think of Amazon, they're looking to, they're the big fish, right? Anytime the small fish comes along with a good idea, and I think this is a brilliant idea what Hims and Hers are doing, discreet healthcare for people that don't like going down to the shops, to the pharmaceutical shops, the healthcare shops, do it all online. And yeah, I just think this is such a great business model, and we love that recurring subscription based companies, what I do. Let me know guys, what you think. Other than that, that's all for this video. I very much appreciate your time. If you lasted this long, I can't speak properly, hit the like button, and if you haven't subscribed already, please do so, and I'll see you in the next one. Peace.